London, Reuters, world shares rose on Friday but were set to end a second week lower amid intensifying worries over the fallout of a trade dispute resulting from U.S. tariffs, while oil prices were higher ahead of an OPEC meeting later in the day. The MSCI All Country World Index MIWD 00000 PUS, which tracks stocks in 47 countries, was up 0.2% in the European morning but down 1.3% on the week, its worst weekly showing since mid-March. Investor anxiety over a possible full-blown trade war has deepened this week over increasingly sharp rhetoric between the United States and China, and growing evidence of the economic damage such a conflict could produce. German carmaker Daimler, DiGN.de, cut its earnings forecast earlier this week, saying tariffs on cars exported from the United States to China would hurt Mercedes sales. India joined the European Union and China in retaliating against US President Trump a trademark tariffs on steel and aluminium, raising import duties on US almonds by 20%. U.S. Commerce Secretary Wilbur Ross said on Thursday the United States needed to make it harder for its trading partners to have high trade barriers in order to achieve Trump a trademark's ultimate goal of lower tariffs and a level playing field. Chinese state media said on Friday that U.S. protectionism was self-defeating and a symptom of paranoid delusion that must not distract China from its path to modernization. With no negotiations in sight at the moment, our base case scenario is shifting to a further escalation of the trade conflict between the two countries, wrote analysts at Danske Bank in a note to clients. There is a risk of a further deterioration in relations on June 30, when Washington is due to announce a plan to restrict Chinese investments into the United States and limit exports of U.S. tech products to China, they added. Strong financial stocks and better-than-expected Eurozone Purchasing Managers Index for services helped drive a timid relief bounce in European shares. The Pan-European Stoxx 600 and its Eurozone counterpart stocks were set for their biggest weekly loss in 3 months as the consequences of rising protectionism sank in, notably for the autos sector. The strong PMIs also boosted the euro equals D4. It was last up 0.5% on the day and was set to end the week higher by 0.5%. Against a basket of currencies, the dollar was 0.2% lower. Against the yen, the greenback was little changed. It was modestly higher at 110.14 yen JPY equals EBS, below a one-week high of 110.76 scaled the previous day amid lingering concerns over the U.S. China trade dispute. Potential for all-out trade war, European political risks and emerging market volatility remain potent factors that should contain $/yen within the current range, though the lack of downside over the last week or so suggests stronger underlying demand, wrote Robert Rennie, head of market strategy at Westpac. The European PMIs also showed manufacturing growth was the weakest in 18 months on trade worries. Elsewhere in Europe, Greece's euro trademark's borrowing costs fell to 4-week lows on Friday after Athens won debt relief from the Eurozone. Sterling was 0.5% higher against the dollar. GBP equals D3 on Friday, extending gains made the previous day after the Bank of England's chief economist Andy Haldane unexpectedly joined the minority of policymakers calling for a UK interest rate hike, citing concerns about growing wage pressure. Oil prices rose on uncertainty ahead of a meeting of the Organization of Petroleum Exporting Countries, OPEC, and other major producers including Russia starting in Vienna later in the day. Saudi Arabia and Russia are in favor of raising output. Other OPEC members, including Iran, have opposed this, resulting in a flurry of backdoor diplomacy ahead of the meeting. Brent crude LCOC1 traded at $74 a barrel, up 1.3%. U.S. West Texas Intermediate crude CLV1 rose 1.1% to $66.27 per barrel. Earlier in Asia, MSCI Euro trademark's broadest index of Asia-Pacific shares outside Japan. MIAP J0000 PUS dropped as much as 0.35% at one point to touch its weakest since early December, before erasing losses to be up 0.15%. Still, it was 2.3% off for the week. Hong Kong's Hang Seng Chi plumbed 6-month lows, having lost 3.9% so far this week. South Korea's Kospi KS11 hit 9-month lows, and in mainland China, the CSI 300 index CSI 300 lost almost 5% this week to one-year lows. Japan's Nikkei N225 gave up 0.8% for a weekly loss of 1.7%.